Most people will never build real wealth. Not because they earn too little, but because of 7 invisible leaks. By the time this ends, you will know exactly where your money is disappearing each month, the specific numbers behind each leak, and the precise steps to close every single one of them, starting today. These 7 leaks affect 9 out of 10 American households. Some feel familiar, but most are hiding in plain sight inside the financial decisions you make every single day. Each one compounds quietly over time, and together they can cost you hundreds of thousands of dollars across a lifetime. Leak number 1 is lifestyle inflation. Every time your income rises, your expenses rise with it. The average American spending tracks their earnings so closely that their savings rate barely moves, even after decades of raises, promotions, and career growth. Think about the last time you got a significant raise. Did you move your savings rate up? Or did you simply upgrade your car, your apartment, your vacations, or your wardrobe? This pattern has a name: lifestyle creep. And it is the single most common wealth killer for middle and upper middle income earners, because it feels like progress while quietly preventing it. Someone earning $60,000 a year who saves 10% builds $6,000 annually. But if they commit to saving just 5% more after every meaningful raise rather than spending it, they can accumulate over $200,000 in additional wealth over 20 years from that one decision alone. Leak number 2 is leaving your money in a traditional bank savings account. The average big bank savings account pays just 0.4% interest. Inflation currently runs between 3 and 4%. That gap is not a neutral outcome. It is a guaranteed, compounding loss measured in real purchasing power every single year. Most people park their emergency fund and extra cash in their bank's default savings account out of habit and never revisit it. Meanwhile, high-yield savings accounts at online banks and short-term U.S. Treasury bills are paying 4 to 5%. That difference on $50,000 in savings is roughly $2,000 per year in lost interest. Every year, $100,000 in a standard savings account for 10 years loses roughly $27,000 in real purchasing power when inflation averages 3%. That same amount in a high-yield account recovers most of that ground. And in a low-cost index fund, it has historically grown to over $250,000. Leak number 3 is carrying a revolving credit card balance. The average American household carries over $6,200 in credit card debt at an average interest rate of 22%. That is not just a debt. That is a compounding penalty applied to almost every purchase you have ever made on that card. Paying 22% interest on a balance means that a $100 dinner actually costs $122 the moment interest accrues, and more every month you carry it. What feels like convenience spending is actually one of the most expensive forms of borrowing that exists. It is a tax you choose to pay voluntarily. A $6,200 credit card balance paid at the minimum payment each month takes over 22 years to eliminate and costs nearly $11,000 in interest alone. That is almost double the original amount borrowed. The debt you think you are managing is managing you, quietly redirecting wealth you could have invested. Here is the thing that took me years to fully understand. The people who build wealth consistently are not necessarily smarter or better paid than those who do not. What separates them is the clarity to see these leaks for what they are and the discipline to close them before the money disappears. Leak number 4 is failing to capture your full employer 401k match. If your employer matches contributions up to 3 or 4% of your salary and you're not contributing enough to capture it fully, you're turning down a guaranteed 100% return on that portion of your investment. No market in history offers that. A worker in the 22% tax bracket who contributes $6,000 annually to a traditional 401k saves over $1,300 in federal taxes that year. When that tax savings is itself reinvested over 30 years, it alone compounds into over $100,000 additional dollars in retirement wealth from the government's share. Retirement is not just a financial destination. It is a calculation that begins the moment you receive your first paycheck. Tax-deferred accounts like the 401k and the IRA allow your money to compound on gains you have not yet paid taxes on, a structural advantage that grows more powerful with every passing decade. Leak number 5 is recurring subscription spending. Research shows the average American spends $219 per month on subscription services. But when asked to estimate that figure, most people guess $86. That is not a rounding error. That is over $130 per month vanishing with no conscious awareness. A subscription audit takes less than 30 minutes and requires nothing beyond your last 3 bank statements and a highlighter. Most households find between $200 and $400 per month in charges tied to services they either forgot they had or stopped using months ago. That money, redirected monthly into an index fund, changes your financial trajectory completely. Subscriptions are engineered to be forgotten. They are priced below the threshold of conscious spending and renewed automatically so that cancellation always feels like effort. Recognizing that this is by design, not by accident, is the first step toward treating them like the monthly wealth drain they actually are. Leak number 6 is the true cost of car ownership. A new car loses approximately 20% of its value in the first year. Within 5 years, it has lost nearly half. The average American car payment now exceeds $700 per month, and that figure does not include insurance, maintenance, registration, or the opportunity cost of that money not being invested. The math on vehicle financing is unambiguous. Buying a 3-year-old version of the same car you would have purchased new and investing the monthly payment difference can create a gap of over $150,000 in net worth by retirement. Transportation is the second largest expense most households carry, and it is one of the most negotiable. I have watched families earning 6 figures struggle financially, while others earning half as much built lasting wealth. The difference is almost always this. The wealth builders chose to own their future rather than finance a lifestyle they believed they had earned. One is a feeling. The other is a number on a balance sheet. Leak number 7 is waiting to invest, and it is the most expensive of all 7 because it steals from you permanently. Compound growth does not merely add returns over time. It multiplies them. Every year of delay does not cost you just 1 year of growth. It costs you all the growth that year's gains would have generated for the rest of your life. Someone who invests $500 per month starting at age 25, earning a 7% average annual return, reaches $1.3 million by age 65. Someone who waits until 35 reaches $659,000. An identical investment strategy, an identical contribution amount, a 10-year difference in start date, and a gap of over $640,000. Time is the variable. The stock market has returned an average of roughly 10% annually before inflation over the last 100 years, through wars, recessions, crashes, and recoveries. The people who built wealth through that market did not do so by picking the right moment to enter. They built it by staying invested through every wrong moment everyone else was fleeing. Here is your 7-point action plan. Fix your savings rate before your spending adjusts to new income. Move idle cash to a high-yield account immediately. Pay down credit card balances as aggressively as possible. Capture every dollar of your employer match. Audit subscriptions quarterly. Buy vehicles with cash or used. And invest anything, starting this week. Real wealth is not built in a single dramatic decision. It is built in dozens of quiet, consistent, often unglamorous ones. Every leak you close is money that now works for you instead of against you. You do not need to fix everything at once. Choose one item from that list before the end of today. Just one. That is how it starts. If this gave you clarity on where your money is actually going each month, share it with someone who needs to hear it. Subscribe for more content like this. Every week, practical strategies to help you keep more of what you earn, grow it wisely, and build a financial life that belongs entirely to you.